Welcome to Navigation Trading Live. You are now part of a growing group of do-it-yourself traders who are trying to change the way investors think about building wealth. But because we don't believe in using financial advisors, stock tips, or traditional financial media, we have to do things different. We have to do things smarter. We do that through an art and a science we call trade hacking. At Navigation Trading, our methodology is based on statistics and probabilities, not hype or emotion. Our core strategies have been used by market makers, hedge funds, and floor traders for many years. Now, we share these secrets with you. Whether your goal is to make an extra $1,000 per month or replace your current income, with our guidance, you can achieve financial success beyond your wildest dreams. So, let's get started. What's up, traders? Hope everybody had a great weekend. It is Monday, June 19th. This is Navigation Trading Live, where we will go over the markets, give our trade of the week, and we are getting back into our weekly trivia contest. So, as you remember, here's the quick and dirty of the rules. First listener to answer correctly wins. You must post your answers in the comments section of Facebook or YouTube. Emailed answers will not qualify. And the prize, as we've done in the past, is you can win one of our courses at NavigationTrading.com. So the course of your choice. We've got a couple new courses coming out soon. Just working on some, I know I've been saying this for a few weeks, but working on some last kind of final stages of editing. I always try to get out stuff as high quality as possible for you guys. So that'll be coming soon. But let's jump into this week's trivia question. So it has to do with the drag on leveraged ETFs. You know, a lot of ETFs like VXX or USO or different leveraged ETFs that have 2 times or 3 times leverage. Or if they're inverse ETFs, they have what's called drag, meaning they have a downward bias to them. And what causes that is what I'm referring to in this week's trivia question. And so the question is, what is the term that refers to the forward price of a futures contract that is above the future spot price? Okay, so I know that this is a little bit heavy for a Monday morning, but stay with me. So when an ETF that's leveraged or something that is attached to a futures contract, for example, to price that ETF, they are constantly having to roll the futures forward. So there's the June futures, then they got to roll to July, and then the August, and so forth. And by doing that, the different price of the different futures in different months have different prices. So when the when the forward price is higher than the current spot price, there's a term for that, and that's what I'm looking for. Okay, so if you can tell me what that is, then you'll win a free course from Navigation Trading. So good luck. Post your answers on YouTube. Post them on Facebook, wherever you're watching, and I will let you know if you are correct. And don't forget, if you guys have any topics or questions or things that you want me to cover in this Navigation Trading Live broadcast, don't forget to make a comment in the section of YouTube or Facebook, or just shoot me an email, and I'll be sure to try to cover that in future broadcasts. So let us jump into the platform and see what's going on today. So futures are up. You can see the S&Ps are up about 9. Dow's up 80, NASDAQ's up over 51. Really watching the NASDAQ is because it's kind of been the leader in the clubhouse over the last week or so. And I put this trend line on here, and I want to stress that I do not use trend lines or technical analysis to trade. I think most of it is just pure garbage. What I do think can be valuable in is creating engagement, creating a reason to make a trade, but then you're always still making high probability trades. And so the reason I put this trend line up is just because I wanted to show you how the, let me get my different pointer here. I wanted to show you just how price has been reacting off this. So there, we had this bottom here and then this bottom here. So I extended that trend line up and we saw price come down and hit it and react there, break through it and react there, but close above it. It kind of bounced off it there and then closed above it, bounced off it there, and then pushed through it and closed below, and now we're making a up move this morning to retest that trend line. Now, so what I'm using this for is I'm looking at this as that we're still looking for potentially more downside in the market. But if price pushes up through and closes above this trend line in the NASDAQ, then I think all bets are off, and then we're going to push higher and go look for new highs. Okay, so that's part of the kind of the methodology, kind of the thought process that I'm going through and kind of trying to figure out what I think the markets are going to do. Now, what I think the markets are going to do doesn't really matter, right? I mean, I did a video on why your opinion does not matter, and so it's really important that even if you think it's going to go down, you think it's going to bounce off this and revert back to the downside, that doesn't mean you load the boat. That doesn't mean you do anything. You can take small positions if you want directionally, or you can just use that as a overall bias in your strategies that you're putting on. But you always still want to be putting on these high probability trades that we teach at Navigation Trading. So let's take a look at some of the other markets here. If we look at bonds and notes, they're fairly flat. The VIX is fairly flat as well, up about 0.5%, whereas VIX futures down about 3%. Okay, so that comes into our trivia question of the week as far as the spot price versus the futures and kind of what that means. Oil up about 0.25%, gold up about 0.5%. Silver down a little bit. You can see natural gas making a big move, down over 4%. If we look at UNG, which is the corresponding ETF, you can see implied volatility is getting crushed. I was hoping it would keep going up a little bit so we could give us a little bit of opportunity in nat gas, but not for now. Soybeans up a little bit, corn down almost a percentage point, wheat up about 0.75%. FXI up 1%, the euro pretty flat, EWZ down about 0.5%, and then you can see some of the other sector ETFs, biotechs up a little bit, XOP up a little bit, financials up about 0.5%, and then some of the other currencies. So not a ton going on this morning. If we look at some of the big stocks that we monitor, Facebook, Apple, Netflix, Google, Amazon all up over 1%. Costco back down a little bit more. Nike up 1%. Target down. So it looks like the retailers are still getting hit after the announcement that Amazon is buying Whole Foods. Kind of a interesting partnership there. But Amazon announced that they're buying Whole Foods, and that really hit a lot of these retailers. If you look at Costco and what happened to it the last couple of days, it's just been getting hammered. Same thing with Target, not as bad, but down quite a bit. If we look at Kroger grocery stores, it really got hit. It had earnings and the announcement with Whole Foods being bought, just putting some downside pressure on those markets. So let's go to our trade of the week, and based on what I was just talking about as far as retailers, I'm going to look at Costco. So this is a stock that we don't trade a lot, but and I don't sell a ton of premium on stocks. I'd much prefer to do it on futures or indices or ETFs. But in this case, I mean, look at the implied volatility. Just had earnings a couple weeks ago, so we don't have to worry about earnings, don't have to worry about dividends. And so that makes it a decent time to sell some premium in some of these stocks that are getting hit and the implied volatility is getting inflated. So if we go to the trade tab, we got 32 or 60 days to expiration. Because of the next earnings cycle. I don't want to go out 60, and that 32 days is still right in our wheelhouse, so that's the one I would choose. So if we go here, I'm going to set up an iron condor, and let's go to around the 20. Let's go do the 22 delta at the 173 strike. So we'll sell iron condor. And then I'm going to do this 5 points wide, so I'm going to look at the 178 and see if we get the credit that we're looking for there. So we've got the 178 call here. Then on the put side, we'll go over here. We could do the 155, or it looks like there's no volume, no open interest on the 157.5. So we go up to 158. So either the 158 or the 155 is fine. I'm going to go a little bit tighter because implied volatility is high. I always like to default above 20. 18's pretty close, so you could choose the 55 if you wanted to be further out. But I'm going to go with the 158 and get a little bit tighter to price, collect a little bit more credit. So, excuse me, I got to go down here, 158. Put that in, and then same spread width of 153. And let's go ahead and analyze this. So if you take a look, you can see we've got a, for one contract, got a $160 max profit, max loss of 340, so well within our kind of risk to reward evaluation. So that looks good. I'll probably do a few contracts here, 2 or 3. If I did 3, you can see 480 is our max profit with a max risk of 1,020. So that looks good. So I'm going to go ahead and work this order. If I get filled, I'll send it out to our alert subscribers. If you are not an alert subscriber and you want to try it out, we've got the 2-week trial going on. So feel free to check that out at NavigationTrading.com. Everybody have a great week of trading. We'll talk to you next week.